If today's trade is anything to go by, it's very lackluster, but yeah, the week has been interesting. Radhika Gupta, Director of Forefront Capital Management, joins us on the show now to talk about her prognosis of the market. Radhika, many thanks for joining in. What do you make of trade? I mean, the last couple of weeks, after the bit of a rally that came post-budget, we really haven't done anything on the index for sure. Mid-caps may have done that, but what's the sense? What comes ahead?
I think it has been a choppy market, and we remain neutral because it's hard to see the market going in either direction, right ahead of us. The valuation picture has been expensive for a while, especially when you look at India in comparison to some of the other global markets, emerging BRIC markets. Forward valuations at 22 are still looking expensive. There has been some positive momentum, but that's also dying down. The volumes are a little bit of a concern. And there are signals from the credit markets that are also a concern. The spate of good news is that Infosys earnings have been good. One can expect the next round of earnings, the major ones coming in next week, to be reasonable. So we really have to look to earnings for a big move in the market.
Sure. What are you expecting from Reliance Industries this time around, especially from the oil and gas space, given the weightage it has on the index?
Right. I think we're bullish on the oil and gas space in general. I think rising commodity prices are coming, so the oil and gas space is something to be excited about. Reliance Industries within that space is more representative on the index. More excited about smaller guys like MRPL in the energy space, or ONGC, which has got a strong domestic production story in oil, than a Reliance Industries.
It's really after a while, that I'm hearing somebody saying that he or she is bullish on MRPL.
Right.
Why so?
I think MRPL has a strong valuation story. I think it's been beaten down a little bit, so the valuation story is good. It's often ignored. It's a smaller stock. The earnings from the last quarter were fairly reasonable. The profitability numbers were at least better than our expectations.
Sure. Radhika, obviously now the main story at hand is regarding the steel prices and how the government is probing into it to see whether those prices are justified, or in fact indeed those prices have gone way overboard. In fact, corporates seem to believe that the prices should be on the higher side, but internally, what do you take away from these metal prices, especially the steel companies, and do you think they have an upside from here?
I think there are steel companies that have an upside. I think Tata Steel has some upside, both on the sales perspective and on the margins perspective. Tata Steel within the steel guys has tried to diversify its business and go into more value-added steel components. Things like flat steel, contract-based trade, contract-based business. So it's done well. It's got some upside, and history indicates that its numbers have been a little bit immune to some of the weak steel price regimes. Like November, December, we had weak steel prices, but Tata Steel's sales still managed to remain reasonable. So I think Tata Steel has some upside to go. They're one of the few steel majors who have shown positive numbers in Europe, and management is pretty bullish about Europe, unlike global guys like Arcelor. So that's a good sign, reducing inventory, cutting down on employee costs. So I think that stock in the steel pack has a good way to go.
Harendra Kumar, Head of Institution Broking and Global Research at Elara Capital, also joins us on the show now. Harendra, hi.
Out with the strong guidance. What else would you be watching out for?
I think we're looking at the banking sector, despite some of this ULIP drama that has been going on. Yes, that's been going on. I think Kotak Bank is in a good place among the private sector banks, and Axis is in a good place. Kotak is in a good place because, the two sides to their business. The banking side is fairly stable. Net interest margins at 6% are some of the highest in the among the players. The current account, savings account growth has been pretty good, and the non-performing assets have come down. Their capital markets business is stable. Ex-insurance, it's grown about 70-80%. So that's a good sign versus some of the other guys like an ICICI or an HDFC who might be hit a little harder by this whole thing.
Harendra, in terms of these banking counters, particularly ICICI Bank also, keeping in mind that they're looking to sell at their 14% stake in Firstsource Solutions?
Yeah, but I think, I don't know how much the subsidiaries will add value. I think as long as the
I think in the PSU banking space, we've been saying for a while that Punjab National Bank is a stronger PSU player. Again, sort of their core banking is in order, so, deposits, margins. Last round of results sort of showed that that was in order. Their international exposure is much less than a number of PSU banks, and they've been focusing on, improving the quality of their loan book. Their sensitivity to rising interest rates is about 6%, a couple of points lower than most other PSU banking counterparts. So among the PSU guys, they're a good bank. Corporation Bank is also an exciting one.
Vinder, what would you do with the PSU banking lot? Touch it at all, and which ones would you?
See, I think PSU's bank, I think there are some of the smaller private banks that are doing reasonably well.
Fertilizers as a pack as well. Radhika, are you taking a call in that sector?
We don't typically take a call on the fertilizer and some of the smaller cap sectors. I think on the sugar piece, just to sort of chip in there, I think sugar stocks are definitely going to be impacted by the change in prices. We should see lower valuations of sugar stocks.
As a pack, what's the exposure like there right now, Radhika?
We are underweight the real estate segment, have been for a while. I think the real estate boom, we're not seeing it anytime soon. And the valuations don't justify, getting into the sector. It's been beaten down, at least in the large cap pack. So we also remain underweight on real estate.
Investment banking concern, what's the sense?
Reliance Capital, pretty bearish on Reliance Capital. Again, as you said, it's been, beaten down. Since IPO, results and value to shareholders hasn't been very exciting, and insurance is one of the biggest aspects of what Reliance Capital is doing. So insurance has driven a lot of the income in the past, and with guys, saying that value profits in insurance are going to come down some 10 to 20% on the back of new regulation.
Did you take any exposure at all in the stock?
We have not taken, any material exposure in Reliance Capital, or Bajaj Finserv, some of the others you mentioned, primarily for this reason.
To you, auto ancillaries as a pack now, do you go bullish on this particular space?
More bullish on the auto space as a whole, the auto maker space than the auto ancillary space. No doubt that the whole space will benefit from the macroeconomic environment, the interest rate environment, and has survived, the little bit of rough time during the excise duty. Within the auto space, the guys we really like are Mahindra and Mahindra, which has done very well. Sales have taken a big pickup primarily on the tractor business, and we think that should do well because there is a lot of government support towards the farming sector, a lot of subsidies towards that area. So we think the tractor business should do well, and even their core auto business, the UVs and the truck business, they launched Massimo light truck. That's done well, seen a pickup in volumes, and as they distribute it out to the rest of the country, that should do well. So more bullish on the auto space in general than the ancillaries.